Welcome to the Sector Spin with Terry. In this video series, I share with you what I'm watching each week in various sector industry subgroups. Following the recent 5-week run-up with the markets now considering capitulation, now is a very difficult time to be thinking about adding new entries to your portfolio. Most likely you've seen some strong gains in several stocks in your portfolio and you might be saying to yourself, just let it ride. Now, experience has taught me also to let my winners ride, but at the same time, I'm going to manage my risk and place trailing stop orders on my trades to lock in profits should an unexpected downturn evolve. Now, capital preservation is a key concept of risk management and one that we teach to our clients here at TradingAnalysis, and we prescribe to ourselves in our own trade plans. Okay. So where are the next set of winners coming from? For that, let's take a look at the current weekly RRG of the S&P sectors. Now, these relative rotation charts not only help us track which sectors are currently outperforming the benchmark S&P, but they also give us guidance on where we can look to find future market leaders. The x-axis here on this chart represents the relative strength ratio of the stock or sector as seen here relative to the benchmark, which in this case is the S&P 500 index. Now, values greater than 100 indicate the underlying instrument is outperforming the benchmark, and values less than 100 mean the instrument is underperforming. The y-axis here represents the relative momentum of the underlying instrument relative to the momentum of the benchmark. Now, plotting these two ratios over time, we can begin to track the path of the underlying instrument. Not only can we see where we are at present, but we can also stretch these tails back in time to see where we came from. The heading at the end of the vector tells us where we are going. The length of the segments tells us the velocity at which we are moving. Now, following these signals can guide us to selecting stocks that are either currently positioned or soon will be positioned to outperform the benchmark. Now, this is our ultimate goal, correct? Having a portfolio that consistently outperforms the benchmark S&P. To do that, you'll need to keep your portfolio fresh with new stocks as some of your old leaders rotate out of their past leadership positions. So let me interpret what we have here today. Presently, the energy sector, consumer discretionary, financial sector, and technology sectors have their relative strength ratios greater than 100. And these sectors have indeed been responsible for driving the overall benchmark higher in recent weeks. On the other hand, real estate, healthcare, communications, utilities, staples, materials, and industrial sectors have their relative strength ratios less than 100, thus their performance has been less than the overall S&P benchmark. Now, holding underperforming stocks in your portfolio causes drag and resistance and counters the impact of your winning holdings in those leading sectors. Now, watch as I animate this chart. You'll see the rotations of the sectors as we move through the year. Let's go back. Let me zoom out. I'll tell you what. I'm going to zoom this out. You're also going to see this momentum and relative strength elliptical area here stretch and grow as we move through time. We're going to start back here at January, and I'll zoom out a little bit. Back in January, end of January, so there's the beginning of January. At the beginning of January, we saw the energy sector rapidly rising here through what we call here the improving quadrant. Okay? You can see which sectors were in leadership condition and which were in lagging. Throughout the year, watch as the orbits, and I call them orbits, watch as they move essentially in an elliptical motion, but they generally move in a clockwise fashion. Now, sometimes, like here in the energy sector, we'll see a new elliptical area rotate right back into leadership position, which we certainly had seen there before driving itself back to the southwest again. And now we see energy rising rapidly once again, okay, back up into the leadership condition. Generally, the rotation is clockwise. It's usually in elliptical form. And as we move through the 4 quadrants, which, by the way, we name these quadrants based upon the performance of stocks that we see when the end of the vector is in that particular quadrant. So this top right quadrant is the leading quadrant, where both the relative strength ratio and the momentum ratio exceed that of the benchmark. The next quadrant here is called the weakening quadrant. This is where momentum is less than the benchmark, but the relative strength ratio remains outperforming. The next quadrant here is the lagging quadrant. Stocks found here have both lower relative strength ratio and lower momentum ratio, thus they are underperforming the benchmark on both counts. The final quadrant is what we call the improving quadrant, where momentum has returned to previously lagging stocks, but the relative strength ratio remains underperforming. Now, we generally find some of our next leaders as they complete a full cycle down in the lagging quadrant and start to hook back to the north and move up into the improving quadrant. Now, based upon the heading and the velocity of these turns, we can develop new watch lists of potentially promising new leaders in development. Now, while it is still kind of very early on, I want to zoom in here to the industrial and the materials sectors. These two sectors currently have the lowest relative strength ratio of the 11 sectors. But we have a hint that this may be changing soon. You'll see as I animate a little bit here, I'll go back a couple of weeks. Let's go back, say about a month. Zoom out just a little bit. So I can see from the curve in this tail here, each of these line segments is 1 week. This is a weekly RRG. This is 1 week, and this is where it was a week ago, right? So if I go back in time, you can see here's where the industrials was back on September 17th, and here's materials. So as I animate 1 week at a time, you can see the improving momentum. So the vector is moving to the north, momentum is starting to gain. Relative strength is still underperforming, but it's kind of holding steady. Now, these two sectors kind of meander for a while. They're kind of wishy-washy, but here recently, notice this very last turn. This is this current week. I'm getting a very early signal. I need a little bit more time to confirm this, but I'm getting a very early signal with the length of this line segment we call velocity accelerating, okay, gaining from week to week. It's accelerating back to the northeast. When it's moving to the east, it's gaining relative strength. When it's moving up, it's gaining momentum. So in effect, we're gaining both at the same time. Now, generally, when we see this happen, institutional investors have started buying back in. Now, we'll monitor these vectors over the next several weeks and see if we see further positive gains in both momentum and relative strength, as evidenced by the heading and the length of these vector tails. Then we'll start to probe into which stocks in each of these sectors are demonstrating improving trends. Then we can add those to our watch list and be ready to put trade plans in action at the appropriate time. Follow us at TradingAnalysis.com. Become a subscriber so you don't miss out on how we leverage this powerful technical analysis tool to provide our clients with quality market analysis and guidance to safely navigate these uncertain times in the market. Contact us at info@tradinganalysis.com if you want to know more about how we can improve your trading. Best wishes in your trading ventures, and be sure to check us out at tradinganalysis.com.